All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Summer 2022 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners, and we have a fireside chat coming up here with Precision Optics, ticker symbol currently of PEYE on the OTCQB, and their Chief Executive Officer, Mr. Joe Forkey. Before we sort of dive into some questions here, I just want to remind everyone that management is available for one-on-one meetings later this week, today and later this week. If you've not already signed up, please send me an email at Blum@Lytham Partners, that's BLUM @lythampartners.com, or you can visit the website, lythampartners.com/virtual. You can click on the one-on-one meeting request button and we'll look to get you taken care of there. So Joe, let's begin.
Great.
Let's start off with a very brief introduction for those that may not be familiar, both of yourself and the company at a high level.
Yeah, sure. So my name is Joe Forkey. I'm CEO of Precision Optics Corporation. My background initially was on the technical side. I joined the company about 20 years ago, took over as CEO about 10 years ago, and have been working on the management of the company ever since then. The company is, as the name implies, an optics company, Precision Optics Corporation. Everything we do has something to do with optics, and what I mean by optics is really technical optics. So we make cameras and illumination systems and systems that can be used to see in places that are difficult to see otherwise. The company's been in business since 1982. We've done lots of things over the last almost 40 years now. And we've been involved in a number of different markets, including the defense market, the telecom market, industrial and commercial markets. But throughout our entire history, we've been involved in medical devices. And so we do an awful lot with minimally invasive surgery and next generation imaging systems for medical devices. We've specialized in a couple of very specific niches. And there are really 3 or 4 of them. We focus on really small optics, meaning optics that are as small as 50 microns, which is only slightly larger than a human hair. So we can get very, very small optics, very small optical systems. We also specialize in 3D medical systems. This is just like 3D TVs or 3D movies, except we bring the technology of 3-dimensional imaging to bear in endoscopes and robotic surgery and those kinds of systems. We also have developed a unique capability in digital imaging. So as the whole world has moved away from film and into so-called CMOS sensors, we've developed capabilities around designing lenses and entire systems that use CMOS sensors, and also the electronics and image signal processing that goes with that. And then finally, we've developed a very robust network of partners around the world so that we can manage through supply chain issues that other companies may have difficulty managing through for optical systems. So that's a very sort of high level overview of the things that we do at the company. We've been through a lot of ups and downs over the years, and we put in place a strategic plan 6 or 7 years ago about the way that we would engage with customers. It's been pretty successful. We broke through break even a few years ago. We acquired a couple companies over the last couple of years. I assume we'll talk about some of that. And we're poised right now we expect some significant growth going forward.
All right. For those that are not familiar, talk a little bit about the business model that you've developed here, in terms of working with customers at the very early stages of projects, lending the expertise you just talked about, micro optics, 3D imaging, digital imaging to sort of bring these projects and these products to the market. Just help us understand the business model that you guys have deployed here.
Yeah, sure. So at our core, we're really a technology company. We've developed internally and brought together through acquisition some very specific capabilities on the technical side that are very hard for our customers to find elsewhere. In fact, I think the particular set of technologies we have is really unmatched in any other competitor. But at the same time, we recognize that our strengths are in technology. We're not the kind of company that's going to develop a product and go and market it to hospitals ourselves. That's a whole different kind of business. It requires different kinds of capital investment. And so we've made the decision that we're going to focus on the technology and partner with our customers to be able to, with them, to enable the next generation devices, predominantly in the medical device space, although we're doing some more and more things on the defense side, but predominantly in the medical device space. And so the way that we do that is we go to conferences and advertise the technology that we have in micro-optics, 3D endoscopy, and digital imaging. And we show our customers the particular capabilities we have in those technical areas. And then when we find a good match, we partner with our customers. We ask them to pay us for the time and materials that it takes for us to incorporate our technology into the product that they ultimately want to sell. So I like to say we take our technology and turn it into the size, shape, and color that they need for their particular surgical procedure. Because we're coming to the program with our technology already available, we insist on continuing to own any IP that comes out of the development process, even though we ask our customers to pay for the hours that our engineers spend converting our technology into the size, shape, and color that they need for their product. So we have a part of our business that generates revenue and some profits through the design process with these customers. And so we have what we like to call our engineering pipeline. That's the sort of front end of our engagement with our customers. That typically for a medical device will take 2 or 3 years, depending on what the product looks like. And typically, again, it depends on the particular customer, but typically it can be $1, $2, $3 million in development revenue that we obtain from that development contract as we're, again, working with our customer to put our technology into the product that they need to support their surgical technique. Once we get through a couple rounds of prototypes and we and they agree that the design has been completed to the point where it satisfies their specifications, it's been validated, it's been approved by the FDA, then when they go into production, we move that product from our development engineering pipeline into our production team. And so by doing that, the customer gets the benefit of having engineers who have designed a product that they know can be manufactured in the manufacturing group, which is in the same company. And we get the benefit of continuing to derive the revenue from that manufacturing process. Because we're working in large part in medical devices, those products, once they get into production, typically will continue for many, many years. We have a couple of products that have been going for a couple of decades because the cost and the risk to our customers of changing supplier once they have a supplier approved and a product approved by the FDA, et cetera, is very risky and it's very costly. So once we get a product into production, it tends to stay in production for long periods of time. We typically target projects that will go into production with production rates of about $1 million or $2 million a year, and typically they can grow from there. So the business model basically is to use our technical resource as a pump, if you like, to designing new products that then get put into production. And as we continue to put more and more products into production, because they last in production for many years, that helps us to grow our revenue on a continuous and ongoing basis.
You recently made an acquisition of a company, Lighthouse Imaging, sort of bringing two industry leaders together in sort of this medical optics, digital imaging space, leveraging your capabilities with theirs. Talk about what those capabilities are that they brought to the table a little bit more, the benefits that the acquisition provides to customers. And then maybe as a subset to that, what is it that a customer comes to Precision Optics for, the joint now Precision Optics and Lighthouse, that they simply can't get anywhere else, or let's say very few places elsewhere? What is it that's your real differentiating factor?
Yeah, sure. So yeah, let's talk about Lighthouse Imaging first. Lighthouse Imaging was also founded in the 80s, in the late 80s. And we've known Lighthouse Imaging for many, many years, maybe decades even, I think. And before we merged the companies, I would describe them as a friendly competitor. So there were some cases where we would be competing head to head for a new customer. There are other places where we talked about partnering and working together on a program for a customer. The reasons that we talked about partnering in the past really were the reasons that brought us to the table and ultimately led to the combination of the two companies. Both of our companies work on medical imaging systems, predominantly for minimally invasive surgery, so things like endoscopes and such. And both companies, with a little bit of help from outside contractors, were able to design and build entire imaging systems. And by that, what I mean is everything from the plug that goes into the wall, into the illumination system, which sends light down the endoscope to light up the inside of the body, which otherwise is dark, to the optical system that goes on the distal end of the endoscope to form the image, to the imaging camera, the CMOS sensor, either in the endoscope or on the back end of the endoscope, and then through the image processing and the electronics in the consoles that are typically part of these systems, and all the way to the TV screen where the doctor could see the image that they're interested in seeing. So both of our companies, Lighthouse Imaging and POC, before we combined the companies, were able to do entire systems. They were able to design entire systems and build entire systems. But over the years, Precision Optics had developed a particular expertise in the area of designing and building the optical components that go into the system. Again, with a little bit of help from some outside contractors, we could design and build the entire system, but we really had some really unique IP and know-how around the design and the manufacture of the optical components, the glass pieces that go into the system, both on the illumination side and on the imaging side. Lighthouse Imaging, on the other hand, could also design and build entire systems, again, with a little bit of help from some consultants from the outside, but they had developed a particular niche within the digital imaging space. So they had been focusing on how to get in place really small CMOS sensors on the distal ends of endoscopes, how to do the wiring for those, how to do the electronics for those, how to process the images, how to support the electrical signals that have to run next to cauterizing tools that are often used in surgery. So they had really focused on the electronic side of it. Again, both companies, with a little bit of outside help from consultants, could do a great job with the entire system. But each company had a particular expertise. When you put the two of them together, now where we end up is a place where we need very little help from outside of the company, either of us. And we have really world-class optical designers and engineers, mechanical designers and engineers, electrical designers and engineers, all of which comes together to be able to design the entire system in-house within one company. And so that has added benefit to our customers, because our customers now look at us and see that we have a breadth of capability, horizontal integration, if you like to think of it that way, to be able to support them for the entire system. So that has great benefit to our customers. It has great benefit to both of us from a competitive standpoint in the industry. And it's part of why we see our combined company as very unique in this marketplace. And we're already starting to see some confirmation of that in the way that our customers and the way that the marketplace is responding to our announcement that we're now a combined company. We already have orders that are coming in from customers who have said to us, we're coming to you because you have both ends, the complete spectrum, no pun intended, the complete spectrum of capabilities that are needed to support the kinds of programs that we want to be supporting. So the early indication is that we've gotten it exactly right. The market is responding very well. To your more general question, Robert, about what do our customers come to us for? Part of it is that horizontal integration, now that we're a combined company with Lighthouse Imaging. The other piece, though, is the vertical integration, because I already talked about our capability to take a project from the early design phase, I would even say the conception phase, all the way through the multiple prototypes, the clinical trials, the regulatory requirements. So we're registered to ISO 1345. We've received FDA clearance for our own products. We know how to write the documents that have to go to the FDA or that have to go to the European Union. all the way through to the mass manufacturing stage of these products. So being able to take a product in a horizontal way across all of the engineering disciplines needed to support the program, and then in terms of vertical integration, being able to go from the design through to production and being able to support them not only from a technical standpoint, but also from a regulatory standpoint, makes us, if you like, a one-stop shop for a customer who's looking for someone to help them with their next medical device. It's not surprising that our customers fall into two categories, really. It's the large med device companies who don't do optical imaging systems themselves, the J&Js and Boston Scientifics of the world, as well as small startups who have a new clinical procedure that they need that they're working on developing, but they need the absolute best image quality and video imaging that they can get. So those are really the two categories of customers, and they really come to us because of that combination of horizontal and vertical integration that we have.
All right. When investors are looking at this company, you're looking, as you sort of said, both the commercial production side and how the progress is going on those projects that you're involved in. And then they're also looking at the pipeline and what's sort of to come here. Let's first start on the commercial production side. You know, what has sort of changed over the last couple of quarters that has driven the sort of growth that we've seen here of late?
Yeah, so there are a couple of things that have happened. The first one, and probably the biggest one, sort of in the last couple of quarters, if we're looking back a few years, is that some of the restrictions that were induced by the pandemic have been lifted. And so on the commercial, it was interesting. On the development side, things didn't slow down too much during the pandemic because our customers who were doing development work had the foresight to see that once the pandemic was over, they would be ready with their product, and so they continued the development work. On the production side, it was just the opposite. We had a number of customers who, because of the restrictions on elective surgery, ended up with excess inventory. And so we worked with all of them very constructively, and we came up with constructive solutions for each one of them to manage through this time when the number of procedures that they were supporting had gone down pretty dramatically and pretty quickly. What that ultimately meant was that our production rates went down fairly substantially. I'm happy to report, and I have talked about this in our recent earnings calls, that virtually all of our production programs now are either back in production or very close to coming back online, very close, like within a couple of months. So that's the first thing that's really changed over the last couple of months, and we're just starting to see the impact of that on our revenue numbers. The other thing that's happened is that we have one medical device program. It's a spinal product that we make, which is a great example of the sort of longevity of these projects. We've been making the same product for the same customer for over almost 15 years now, or well over 10 years, almost 15 years. And their typical order rates have been, a few $100,000 a year. And during the pandemic, it dropped, but they came back after the pandemic with a much larger order at about $2.5 million. So we expect that they've expanded their market as well as recovered from the pandemic limitations. And so that has helped over the last couple of quarters as well. It's a great example where of the fact that these products, once they go into production, have the potential to really grow over time and typically will last for a long period of time. The third thing on the production side that's happened over the last couple of quarters is that we announced a $3 million a year program with a defense aerospace customer that we had been working with for the last couple of years. And without going into too much detail, we acquired a company called Ross Optical about 3 years ago. Part of the reason we did that was because we felt that the company was growing sufficiently that we could support not only the medical device space, but also look at some of the opportunities that we had seen for a long time in the defense space. And Ross Optical gave us a good footprint where they already had a number of customers there. So through that combination, we had a team that was able to go out and look for some defense and aerospace programs. And this one in particular, we had been working on for a couple of years. Ultimately, it has worked out exactly as we had anticipated when we did that acquisition of Ross Optical, and it's turned into a long-term $3 million a year program. We believe that it's a good example of other opportunities that are out there for defense aerospace. But in the near term, in terms of the revenue growth that we've seen over the last couple of quarters, that's the other piece that's really had a significant impact.
So let's turn to sort of what's to come here, the pipeline. Walk us through sort of the key contributors to the pipeline. I know we've had a couple that have moved from the pipeline to commercial production just in the last couple of months or thereabouts. How does the pipeline position this company for future growth?
Yeah. So typically we historically had been looking at having anywhere from 1 to 3 programs come out of our pipeline every year. With the acquisition of Lighthouse this year, we expect to see 4 to 5 programs come out of our pipeline. And I think it's not unreasonable to think that the rate at which programs come out of the pipeline could continue close to that rate for the ongoing future. We have a couple of programs. One is an otoscopy program that came out of the Lighthouse pipeline, which just went into production about a month or so ago. This is a product that looks inside of the ear. We have another program that came from the historical POC side of things that is a colonoscope. It's actually a colonoscope with 5 cameras on it, which is why we want the cameras to be very small so that we don't make the colonoscope too big. That's a program that had been held up in getting FDA clearance, and we got word just a couple of months ago that their clearance came through, and they're telling us that they expect to give us a new production order very soon. So that's just a couple of examples of things that have come out of the engineering pipeline. We have one program that we've been talking about for some time now, which would be our first single-use program. Excuse me. I haven't talked much about single-use, but there is a part of the market that is converting to a single-use model. This is really enabled by some of the digital imaging capabilities of CMOS sensors, which we're very well positioned to take advantage of. This would be our first single-use program, and we now think that this one will go into production in less than 12 months now. So that one's moving along nicely. It'll be a good example of future opportunities that we can go after for single use. The benefit, of course, of single use for patients is that you don't have to worry about cross-contamination and sterilization. From a business standpoint, of course, it's the razor blade model. So it's good, solid, long-term production that can continue over a long period of time. So those are a couple of the engineering pipeline programs. I should mention, we are looking at more and more defense aerospace programs. And so I would say today we have somewhere between 10 and 20% of the programs that are in our engineering pipeline that are defense or aerospace, and the remainder is still in medical devices.
All right. And I'm going to quote you here now from sort of your last conference call, where you said that, it was a real watershed quarter for the company, right? A number of these initiatives you had been working on all came together, whether it's from the pipeline to some of these projects, sort of saw improvements in almost every key business metric. Organic revenue growth was up 37%, positive adjusted EBITDA, as you sort of said at the top here. I don't want to sort of put you on the spot and give any guidance going forward here, but what should the sort of recent trends and some of the pipeline growth that you've seen mean towards what the trend should be in the coming quarters?
Yeah. So the contributors in the most recent past that have led to the sort of jump in revenue and jump in the metrics that we saw last quarter are the things that I mentioned just a few minutes ago. So it's the fact that the market and our existing customers are coming out of the restrictions caused by the pandemic. It's the fact that a couple of our long-term programs have increased in size. And it's also the fact that we have a couple of programs, in particular this defense aerospace program that has gone into production now at $3 million a year, which is a pretty good order for us. All of those things we expect should be continuing indefinitely. Beyond that, the integration with Lighthouse is going very smoothly. It's going very well. We're getting new customers coming in and seeing the benefits that come from the combined company. So the rate at which we're seeing new opportunities in our sales funnel coming into our engineering pipeline is increasing, which is great news. And the number of programs in our pipeline, especially now that we've got the companies combined, is greater than it has been any time since I've been here in the last 20 years. And as I just mentioned, we're thinking now about 4 to 5 programs coming out of the pipeline every year. So again, without giving guidance, one can look at those trends, can look at the components that have led to the uptick in our business metrics, our revenue on the top line and the EBITDA on the bottom line. They can look at that and recognize that the contributors to that are contributors that should survive long term. We're still a small company. There's going to be some ups and downs, but in general, we expect the trends to continue to move in the positive directions that they have been.
All right, perfect. Only a couple minutes left here. Just one or two more topics. I sort of made the introduction at the beginning that you are currently traded on the OTCQB. You have talked in the past and during the most recent conference call about potentially uplisting to NASDAQ. You've communicated that out there. Any updates you might be able to provide for us there?
Yeah, sure. So without going into the details, I'd simply say this. We've been in close contact with the folks at NASDAQ. We've been talking to them for quite a while. There are a number of requirements that we have to satisfy, some of which have to do with governance, some of which have to do with stock price and public float and those sorts of things. We're working through the various metrics that we have to satisfy. Some of them have taken a little longer to sort out with NASDAQ than we anticipated, not because there was any particular problem, just because it was a little more complicated than we expected. But we're still on track for getting the stock uplisted to NASDAQ. I expect it'll take another month or so, but we're still moving in that direction and excited about being able to uplist.
All right, perfect. So anything else that maybe you think is important for folks to sort of take away from today's discussion that we haven't hit on already?
Nothing in particular. I guess I'd just finish by saying I sometimes say that we're a 40-year-old startup. As I said earlier, the company has been through a number of different directions over the years. When I came on as CEO a little over 10 years ago, we took a hard look at where we were and where we were going. We put together some new directions, new business approach. We looked carefully at the markets, and we're executing on that plan in a good way. And so we're pretty excited about the future of the company. I think some of the things we've talked about today demonstrate some of the growth that we've seen. We're excited about the opportunity for additional acquisitions. We don't have anything specific planned, but we do believe that the optics community in general is pretty highly fragmented, and there are other opportunities there. So between the organic growth that we continue to expect and the potential opportunities for other strategic transactions, we're pretty optimistic about the future.
All right, perfect, Joe. We'll leave it there. Thank you so much for the time today. Greatly appreciate it. Again, to anyone in the audience, if you've not already signed up for a one-on-one meeting, you can send me an email, bloom@lythampartners.com, or visit the website, lythampartners.com/virtual. Click on the one-on-one meeting request button, and we can look to get you taken care of. We hope you all enjoy the conference. Again, Joe, thanks so much for your time.
Thank you, Robert. Thanks, everyone.